Hello, everybody. Very excited to be here for the Chart Guys' first episode of our new YouTube series, Uranium Talk, where we will be talking about all things uranium. I am Jungle Funk from the Chart Guys. I've been a full time market participant for coming up on 6 years, and I am addicted to technical analysis and the charts. Can't get enough of the markets, and pretty much dedicate every waking hour to learning more about this game each and every day. I am lucky to be joined here by the illustrious Red Devil, one of our resident uranium specialists at the Chart Guys. Chris, happy to have you here. How are you?
Hey, Joe, thanks for the adjective illustrious. It's not often I hear that one.
Tell us a bit more about yourself.
So yeah, I've been a market participant since like the late '90s, really, and the crux of everything I've done since then really is, like sectors and thematic type of investing. I like to like kind of lock on to a sector and kind of milk it for all it's worth, and whether it takes 6 months or if it takes 6 years, I'll do that type of thing. So, and I've stumbled upon uranium. It seems to like fit that bill.
Right on. It's great to have someone with experience going through all of these market cycles. This is like this bear market we're in right now. Obviously, it's not there's far fewer bear markets than bull markets, but it's not your first rodeo by any means. So it's nice to be able to work with someone with that experience on this. And to that note of the sector trade, that's why we're here talking about uranium, because it's one of those rare situations where the fundamental backdrop really is pointing to this could be the place to be, and it's backed by the technicals, which is always necessary because we know that the markets can be irrational. They don't need to fit to a narrative and fit to a story, and the one true thing at any given moment is the price action. And when you look at this uranium price action across this coming up on a year of downside that we've been seeing in the broad market, it's not too shabby. So, you want to tell us what is that fundamental backdrop? What are we looking at here?
Well, yeah, I mean, to just get a quick picture of that fundamental backdrop, it's just, and for me, it was just a stumble upon, right? So it was a couple of years ago, maybe 2 or 3 years ago. It was just like somehow I noticed or saw that all these uranium miners were, instead of digging it up out of the ground, they were buying it off the spot market. So it prompted me to look, and then it came down to, okay, well, the Fukushima event occurred, and it basically decimated the nuclear power industry as a whole, almost globally. It created this situation where Japan shut down all of their entire fleet and started dumping their uranium onto the markets, which killed the price of it. And that was what 10 years ago, somewhere around that. I forget what exactly the year of Fukushima. You know that off the
Yeah,
top
I
of your
think it
head?
was 2011.
2011. Okay, so we're it's
We're
11,
passing the
12 years
decade
ago.
mark.
Yeah, so we're at the decade, and so then I just looked at it. I go, once I started digging in, I started seeing that things were kind of changing as far as the uranium supply on the market. So that's when I really started looking into the companies and finding out all about nuclear and uranium. And it kind of lands us where we are now.
Excellent. So to surmise, essentially, we had the death of the use of nuclear energy pretty much globally after Fukushima. Everybody with big time safety concerns. Supply floods the market at the same time that demand drops severely, and that's what led to this decade long heavy uranium bear market. And now we find ourselves in the situation where we're getting those scales beginning to tilt back,
Yeah,
as
the scales
we
are definitely tipping.
yeah, because here we are, and the green energy movement is vast and thorough, and everybody's looking for different ways to get energy without just going the straight up fossil fuel route. And nuclear is coming back on the map as people realize that it's not quite as dangerous as it seemed based on the outcome of the disaster at Fukushima.
Well, I mean, even to just take that a step further, I mean, when I was in school, it was during the Cold War, right? So we were doing nuclear missile bomb drills in school. They were We had drills where we would all file into the fallout shelters. That's where it was back in the 80s, you know? So, things have changed drastically now, right? And we're starting to see like the European Union has added nuclear as ESG friendly for investment purposes. Canada just announced that yesterday or the day before. So now that's going to be ESG compliant for investing purposes. So the scales, without a doubt, fundamentally are tipping for sure.
You love to see it, and it's that's what makes the uranium space special right now. Is there's no rarity of having like a fundamental thesis where there is potential upside or whatever, but then you look at the charts. The MJ sector is a perfect example of like, oh, this could be so huge, but then you look at the charts and they're all just going down for years on end. It's one of the most destroyed sectors in the market, and while there is a lot of fundamental promise and the backdrop is starting to form, it's you can't see it on the charts. But when we look at these uranium charts and we compare them to the rest of the market, we can see what the potential is there. And we'll pop over to the charts and start looking through them real quick here. So we've got our watch list over here on the right. And up top, we've got the sector leader, Cameco, CCJ. Then we have Uranium Energy Corp. We've got Energy Fuels Inc., UUUU. And we've got Next Gen Energy. And these are our most liquid names that trade on the US markets. And when we look at these names just hanging out up at the top here, holding on to the vast majority of their gains off of the March 2020 lows, and we take a look at that and then we compare that to the S&P 500, and we can see just how well these uranium names are holding on. And we've got some distinctions between our majors. So we'll go back to CCJ here. And we are still in a monthly uptrend, meaning that every chart's going to have its peaks and its troughs, and our troughs are forming higher than the previous ones. So that is our monthly uptrend. And when you have the S&P 500 in a monthly downtrend, and you are a name that is still in a monthly uptrend, that is just notable relative strength. So within our four majors, we've got what I like to call the monthly uptrend crew and then our monthly downtrend crew, because we do have some majors in a downtrend. But to talk about the monthly uptrend crew, we've got CCJ, we've got bulls right now trying to form another monthly higher low compared to $20.02. And we've got UEC similarly holding higher lows on all of these troughs here. And we've got bulls trying to form another monthly higher low here at 318 above the 292 previous monthly higher low. So that's our monthly uptrend gang. And then we've got our monthly downtrend gang, which is UUUU and NXE. And it's only a marginal difference in the charts because the monthly downtrend gang, they're still hanging out at the highs. And while you like to see your charts in uptrends, you can find some beauty in a downtrend if it's showing you the right things. And that's actually what we're seeing here on UUUU, that we do have our monthly higher low formed here, and we've got a lower high compared to the high up here at 1139. But then when you move to monthly lower lows, as a bear, if you were getting any footing, you would see follow through. You'd see a few candles of follow through here, but we broke our monthly lows, immediately turned back around, and then retraced over 50% of this previous move down. So while we're not in a monthly uptrend, this is hardly the monthly downtrend that a bear would want to see. And essentially, when you have these lower lows without follow through, you can just zoom on out and look for a potential flag on a larger time frame. And that's what we're looking at across the sector here is we could potentially have quarterly bull flags here. So that would be the best case scenario. But in the meantime, just to be hanging out at the highs, holding most of your gains over the past 2 years, that is a very good technical look when compared to what we're seeing elsewhere in the markets here. So those are our technical leaders for the mining space themselves. And then we've got a couple ETFs that we can be watching as well. So we have URA, part of monthly downtrend gang, but we've got bulls trying to form a monthly high or low here. And then we've got URNM, pretty similar chart, also in the monthly downtrend gang. So when trading these miners, you want to be watching your ETFs as well, and that's how you can be gauging relative strength, what relative weakness from within the sector. And along with that, you also want to be watching the Sprott Fund. So that is going to be U.UN trading over on the TSX. We can see we've got a lot more strength in this Sprott Fund here. So on the monthly, because of the depth of this pullback, and we did lose our monthly high or low, we would anticipate that a lower high on the monthly would be the most likely scenario. But now that bulls have bounced so far, retracing well over 50% of the move down, there is hope that, again, when we zoom out, we potentially have a bull flag on a larger time frame. So that would be a quarterly bull flag here as well. So we'll have to look and see what we get if bulls can regain this monthly uptrend by forming a higher low compared to the low here at 1222. Then the chances of being able to confirm a monthly uptrend will be good if the retracement is light, meaning over 50% of this move. Say we were to top here, and we can pull a fib on it to be precise. If we were to top here, bulls want to stay above 1481 to keep retracement healthy, look to regain that monthly uptrend, and if they can do so, then the odds of a quarterly bull flag will increase drastically. So we'll be watching this Sprott ETF. We'll be watching the S&P 500 for correlations there because these miners are trading on the main exchanges, so they're going to certainly correlate with the broad market. We can be watching the correlation to the energy sector. We'll see the XLE correlation kind of come and go. Sometimes they'll be lockstep, and then sometimes uranium will kind of do its own thing, which is kind of what we're seeing now as XLE sees pretty notable strength on its own that the uranium sector isn't quite seeing. So that's something to keep on the back of the mind. But, we'll just look to continue to evaluate this. And essentially, we'll move on to another chart here. So this is the URA over SPY ratio chart. And we have a lot of clarity here as we just have a nice monthly equilibrium with higher lows and lower highs as price ultimately constricts and tightens. And for me, this is one of the top charts to be watching in the uranium space. When we zoom out here, we can see in a relative sense how beat down the sector is. And as we're getting clues of uranium holding on strong in the face of market weakness, while we know we have this fundamental backdrop that supports outsized moves to the upside, when we know that's what we're looking at, and then we can look at this ratio chart and see just the perfect clarity of the monthly equilibrium, we can make a statement that if we're going to see a breakout uranium move, then we're likely going to see this ratio chart break to the upside. So we will be watching this continue to tighten up. And if we see the big old uranium boom, this ratio chart will very likely break to the upside. And we'll see uranium gain relative strength against the S&P 500. So that's our technical scene that we're looking at there. And if you look on the watch list here, we've got one name that we haven't talked about yet, and that is CAP, trading over on the London Stock Exchange. And why would we be charting a name that trades on the London Stock Exchange? And it's because they are one of the world leaders in uranium mining. So when we pop over here, and look at our ETFs. This is our URA ETF top holdings, and CAP here is the number 3 holding. So we've got Cameco as an overwhelming uh, has the largest stake overwhelmingly at 22%. And then underneath that is the Sprott Trust Fund at 9.49%. And then next is CAP there. And then we go on to some of our other majors here. And when we look at URNM, we've got the Trust Fund at the number 1 holding at 14%. And then CAP is the second holding at 13.94%. So, players in the uranium space, people looking to navigate this sector, you want to keep an eye on CAP. And if you're over here in the US, in Canada, and you're wanting to get some exposure to CAP, then URNM is a good route to do that at nearly 14% of the holdings there.
So, Joe, can I talk about CAP a little
Of
bit?
course, please do, sir.
Just I want to hit the. I'm gonna share my screen.
All right, let me get on over to that. All right, we see you.
Okay, so this is Kazatomprom. Now, just for fundamentally for the, it's going through a lot of the geopolitical stuff with Russia and all that stuff, and it's the chart is a little bit different than the other charts, which is fine, right? So, but we do see on this weekly chart, it is starting to really tighten up. So we're going to get an answer pretty soon. And the fact of the matter is that since it's such a heavy weighting in these ETFs, it could move the direction a little bit as far as these ETFs are concerned. So we're going to be watching for how this tightening EQ resolves itself, and it have a little bit of an effect on the rest of the space. Time will tell. We don't know how things will resolve. I think the uranium investing world has kind of figured out that Kazatomprom is kind of on its own at this point because of the situation that's going on. Cameco has figured out, with their Westinghouse deal, that they need to start being able to supply our side of the world with not just mined uranium, but with enriched fuel and building nuclear power plants and whatnot. So, there'll be a sea change as far as that's concerned. But for us, technically right now, we do need to keep an eye on this weekly chart. And that's all I got to say about that right now, Joe, about Kazatomprom.
And it's always a treat as an analyst when you get an analyst and a trader when you get a chart with clarity like that, with a nice tightening range, because we know that as these charts tighten up, that the eventual break ends up having more follow through. It's a more explosive move after there. So the uranium space as a whole wants to see this CAP chart continue to tighten on up and then get a big strong move, preferably to the upside. But if it is to the downside, then that will tell us something, and we'll know to pump the brakes and wait for signs that the sector is technically ready. So, and the way correlation works within the markets, all of these individual miners are going to be correlating to these ETFs, and with CAP as such a large holding in the ETFs, you can see the connections of why it is important to see this CAP range break to the upside. So, this is basically just a primer for what we're looking at and why we're interested in the uranium space. We're going to be continuing this show and getting a bit more into the nitty-gritty of some of the elements of it. And as the fundamental story continues to get fresh chapters, we'll be going over that. And as the technical setups present themselves, we'll be looking for opportunity to capitalize on this space. That's why we're all here, is to make money trading the uranium space. So we will be on top of it, be watching it closely, and look forward to potentially capitalizing on what could be a exceptional market opportunity.
Yeah, without a doubt, Joe. You know, just I'm a trade around the core guy, so there's definitely there's a lot of investors out there that are just playing this game that they're just holding. They're buying these and they're holding them, and I don't necessarily even disagree with that. Okay, but what I do is that I buy and hold, and then I also trade a little bit around that core. So maybe I'll throw some options in, maybe I'll trim a little into strength, I'll buy a little bit more into weakness. That's how I play. So we're going to be looking for setups like that all the time.
That is, it's such a great sector to create those opportunities because if we go over, I'm going to pull up this UUUU chart here. We'll get over to our charts. Like, let's learn some percentages on this stuff. And this move up from August 2021 to November, that's 163%, followed by a 52% pullback, followed by another 100% move to the upside, by another 50+% move to the downside. So when you're adding into weakness and trimming out on strength, you end up capturing so much more of the move compared to just riding the waves back and forth. So that's the core trading perspective. But then if you're a day trader, even just looking for intraday volatility, the liquidity is there on these miners to navigate them intraday. And let's just take a look at yesterday. The morning dip up to the high of day, 10%. And when we look at the daily chart, it's not even a really notable looking day, but that's the ranges that these names have and the opportunity that it creates. And if you're saying, okay, you're an intraday trader, your goal is to make 0.5% of your account a day. If you're operating and learning a sector where you can say your average intraday range is even just 5%, if you're looking to grab a 0.5% in there, just becomes a lot easier. So there's opportunity galore in the sector and both directions, and it's nice when you have monthly downtrend gang and a monthly uptrend gang, because then you can have yourself in a position where, okay, the scene has changed a little bit. For a while, we were seeing CCJ with clear relative strength compared to its peers. So if you're playing bullish, you're playing CCJ, and if you're looking to hedge, you were playing UUUU because it was weaker, or NXE because it was weaker. So when you have multiple characteristics across these names within the sector, you can look to position yourself in a favorable situation where you have relative strength or relative weakness in your favor. So that's the beauty of this sector. And we'll see names. It's been so reliable lately with our weekly higher lows and lower highs and just bounces and moves in general. We'll see one name initiate their move, like enter weekly consolidation, and then lo and behold, within the next 3 days, everybody else follows. So there's just the way they do follow the leader around the charts really makes it a fun space to navigate. You can get a lot of clues, and you can position yourself well to capitalize on what is a very volatile sector. And we're just talking about the majors. If you like to get down and dirty, there's a very developed OTC scene. Chris?
Yeah, and the good thing about it, and we'll just close up after this, but the good thing about it is that most of these names are very respectful of basic technical analysis, which even people that really are not like really high end TA people, whatever, you can work basic TA on this sector and do very well. Fibonacci retracements, Fibonacci's are all over in the space, and they're wonderful to work with a lot of these names.
Yeah, I completely agree. And throughout 2021, in the chart guys, we got pretty much every weekly higher low and the monthly higher low across that year. and about half of them were out of golden pockets, the tiny little
Yeah.
window between the 618 and 65 retracement, and they just ding them. If it wasn't CCJ, then it was UUUU that golden pocket ended up bottoming the sector as a whole. So they love riding EMAs, and they love Fibonacci retracements, and what more can you ask for as a trader?
That's it, man. As far as I'm concerned, it's easy. Basic TA. You know me. I'm lazy.
Yeah, these trends are true. They ride the EMAs, true. They give you good reference points, and with that, we're excited to just continue to dig into this sector deeper, continue to stay on top of it, and see what the future brings. See if we do get a big uranium breakout, if we stay range bound, if we end up seeing rotation out of uranium and back into tech or something. Who knows what we'll get, but what we do know is we'll be on top of it and we'll be bringing it all to you. So that's going to wrap up our first episode here. Chris, again, thank you
Yeah.
for doing this show with me.
Joe, thanks for having me on. And, we're going to try to make this a little bit of a regular thing for a while, right?
Yeah, we're going to do our best.
Yeah.
All right.
I'm sure. I'm sure we'll have some differing opinions about stuff, but that's what it's all about.
And that is going to be part of the beauty of it. We've got two guys who look at things two different ways, who have a similar objective in this sector. So hopefully we'll get a nice, well-rounded view of all of this brought to everybody. All right.
Cool.
Let's wrap it up
Yeah.
here.
Wrap it up, sir.
Thank you all for tuning in to the Chart Guys.
We will see you again very soon.
We'll see you again soon. Have a great day or night whenever you're watching this. Take care.